Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now, your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 119. I'm your host, Jacob Ayers. Hey, thanks so much for tuning in to yet another episode. Well, this week, our guest is MC Laubscher. MC is a wealth strategist, educator, and financial freedom fighter. He is the president and CEO of Producers Wealth and creator and host of the popular and top-rated business and investing podcast, Cashflow Ninja. His purpose and mission is to help producers and creators create, protect, and multiply their wealth in any economy without getting ripped off by Wall Street and their governments. MC challenges existing societal belief systems and misinformation around concepts such as money, saving, investing, and wealth and retirement. MC has shared these ideas as a guest on several podcasts and is a regular contributor to Grant Cardone TV, Steemit, Medium.com, LinkedIn Pulse, and Bigger Pockets. Well, without further ado, let's jump into this week's episode. Well, today I welcome on the show MC Laubscher. MC, thanks so much for joining us.
Thank you so much for having me on. Honored to be on your show.
Hey, it's our pleasure. Well, MC, can you tell the audience a little bit about yourself, your background, how you got started investing in real estate, and your journey up to this point?
Yeah, so Jacob, I started, well, actually, let me take a step back. I'm originally from South Africa, so I live in Bucks County, Pennsylvania right now. So it's certainly no Pennsylvanian accent that your listeners are hearing. And I grew up in a very interesting time too, in the history of South Africa. So there was a lot of changes going on in the country. We moved from one form of government to another one. I still remember when President Nelson Mandela was released from prison, and in 1994 he became the first democratically elected president of our country. So there was a lot of stuff going on, and one of the reasons why I share that is that it's really shaped. One of the things that's obviously shaped me and how I view things and how I always critically analyze things and evaluate things and try to form my own opinion and think for myself. And when I left South Africa after university, I came to the United States in around 2001. And I played sports up until 2007. So I was a member of the U.S. men's national team player pool for rugby. So I played in like a city-based rugby league in the United States up until then, which was a lot of fun. And during that is kind of where I started my journey in investing and wealth creation. I came across a purple book that your listeners might have come across as well that says Rich Dad, Poor Dad on it by Robert Kiyosaki.
Yeah.
I really, really enjoyed it, jumped into all of the concepts that were taught, started to really obsessively study everything I can and read up about a lot of folks that have been successful in investing in real estate investing. I took action and bought my first property too. This was in 2001. And that's where the journey started for me. It's the school starts, right, with that first property. So you learn about that. Along my journey, I came across some just incredible mentors and folks that have guided and helped me on my journey. And I came across just a number of strategies of how to what is utilized in family offices and high-level planning within the United States. So I started applying some of these principles in my own investing and wealth creation, and saw just significant results, which was kind of eye-opening. And that led me to where I am today, where I am the president of Producers Wealth, where we help investors, entrepreneurs, professionals, and business owners create and protect and multiply their wealth outside of Wall Street in alternative asset classes. And then I also am the host and creator of the Cashflow Ninja podcast, where we share interviews with Cashflow Ninjas of how to create income from real estate, businesses, commodities, digital and crypto assets, and paper assets.
Yeah, awesome, MC. Well, you have a really interesting journey, and I want to dig into a little bit of the mindset. You mentioned growing up in South Africa in some tumultuous times. You kind of grew up with this mindset and some of these principles that carried over into your investing strategy. So when you moved over here to the US, you bought your first property in 2001 after picking up that little purple book, Rich Dad, Poor Dad by Robert Kiyosaki. Can you kind of take us back to that time and what was going through your mind and what were your goals at that time of, getting started investing in real estate at that point?
Yeah. So from a mindset standpoint, I think that was the first thing that needed to change. I think the one thing that the Rich Dad, Poor Dad book does for a lot of people is it shows you a completely different world. So it kind of almost shocks a lot of folks when they read it the first time, because it's not something that that you find in mainstream kind of financial resources and what a lot of financial celebrities are kind of putting out there, right? So it's the complete opposite of that. So you really, truly have to change that, experience that paradigm shift to change your context that you view the world in before you fill it with content. So for me, I have the personality that I do look at, I feel more comfortable in things that I can see coming, see moving, and see progressing, right? Where real estate isn't something where you go to bed at night and you wake up the next morning and then all of a sudden you have the entire world just changed quickly. It kind of,
you have no real estate all of a sudden.
Right, exactly. So it's not, contrast that, for instance, with the Bitcoin and crypto space, right? Where the markets are open 24/7 a day, and so forth. So I like stuff that moves at the pace of real estate, where you can see, you can plan, you can position, and so forth. So I knew that was kind of where I wanted to create cash flow from. So that's kind of where I picked that asset class. It was kind of aligned with my interests and my personality and also my risk profile. And then I knew I had to start small too. I think, I wanted to test the waters and start with smaller properties before I progressed and moved on. So I think that's kind of like the mindset shift that I took into it is, listen, I'm going to make mistakes. I'm going to fall. I'm going to learn. And I'm going to start small in doing that. And I think the sports background plays into that a lot too, because I think from the mindset that I had too, is that you were going to fail. I mean, in sports and playing at high levels too, the failure is it's just part of it, right? You're going to fail so much more than you're going to have success. So you kind of embrace failure and learn from it, and it's part of the development process. And that's kind of what I took into the real estate as well, because the lessons along the way. I mean, every real estate investor and member of your audience and your listeners can probably nod their head and say, "Yep, the lessons start." There's a ton of stuff that you're going to learn as a real estate investor on your journey.
Yeah, MC, absolutely. I'm just sitting here listening along, shaking my head, just like you just mentioned. So yeah, definitely. So now there are kind of two camps of real estate investors in the beginning, and that is you're going to start big or you're going to start small. You said you started small because you wanted to kind of protect your downside. You knew you were going to stumble and fail a little bit. Coincidentally enough, I took that same path, and I've mentioned this story in the past, but I bought my very first property. It was a $25,000 single family home. So really talk about starting small. Can you kind of talk to us about that process of starting small and how you grew into your portfolio today?
Yeah, I think one of the things that I learned from studying a lot of billionaires is I mean, there's a lot of things that's the complete opposite of what the average person does, right? What they do and their mindset and how they think. And they really, really look at protecting what they have and view protection first over just, chasing massive, massive amounts of returns up front. So there's so many quotes out there. We all hear them and we nod our heads, but we don't really think about them a lot. Warren Buffett says the first rule of investing is don't lose any money. The second rule is follow rule number one.
Right.
And his mentor, I believe, said that you don't have to do a lot of things right when you're creating and building wealth, as long as you don't do a lot of things wrong. So it's all about minimizing the downside, protecting what you have. And a lot of these guys, too, have used base hits instead of home runs, if I want to use baseball terminology, right? So starting small, learning and growing into the next investment has kind of been a process which I embrace. I just look at the from a athlete's perspective as well, and from a sports background, you kind of grow into the NFL player from high school to college and so forth. You don't just start right at the NFL and jump in there. So there's a process involved with it. Now, I know that every person is different, and there's different strategies of how you can compress time and really scale your business very, very quickly and have maximum results and success in a shorter time period to really cut down the learning curve. And there's a ton of ways to do that, but it still kind of has the same flow where you're learning along the journey and you're growing into that person that's going to take you to the next level in your life. I think your listeners might be able to relate, whether it's in their health, fitness, whether it's in relationships, and the same thing applies to wealth creation. As you grow into that next person that's going to take you to the next level within those categories.
Yeah, such good information there, MC, and I think it goes along with like this overnight success mentality, if you will. You see lots of people and you think, wow, that person just had like overnight success. They just blew up. But in all reality, that person started small and took action after action after action, day after day, and eventually made it. And you only see that very last part, right? So yeah, so much good stuff there, and just a good little transition.
Yeah, and looking at the soccer World Cup is on right now at the time of recording, and I'm sure there will be someone that's going to come out and really amaze people on this huge platform,
yes.
The biggest stage for soccer that a lot of folks haven't heard about. Now, that person has trained, so much every single day, has made a ton of sacrifices, and it's taken them years to get up until that point. But all of a sudden, they're an overnight success after, the Soccer World Cup, right?
Yeah, definitely so. Well, MC, you mentioned that you've studied billionaires over the past 2 decades, and you've looked at some of their investing strategies and seen what kind of key takeaways you've pulled from there. What are some of those takeaways you've noticed and common denominators of these billionaires?
Yeah, I think so. To position some of the big things that I learned, I will say this: that a lot of people look at successful people and they think, what are they doing? And the majority of folks, when you see someone that's successful, that's building wealth, creating wealth, they didn't do what everyone else was doing, only better, right? So this small group of people that actually have figured out how to create wealth, how to protect it, how to multiply it, and then how to transfer it on as effectively and efficiently to the next generation, they don't do the same thing as the average person. And as a matter of fact, they don't do a lot different than the average person. They do the complete opposite. That's the first thing that I've seen with these billionaires. One example, for instance, is with a wealth plan. The average person, through 401ks and IRAs and all these other vehicles, will focus on accumulation. They would accumulate things for their entire working career, hoping that there's going to be a pile of money waiting for them, in 30 to 40 years, and then they're going to try and convert that into income and start to draw income from the money that they've accumulated, where billionaires focus on cash flow right away. They'll look at that whole process and say, well, if the end goal is to create income and have income to live from, why didn't you focus that right from the beginning. So you also would have more control over that. So that was kind of the first thing. From a strategic approach, the average person focuses on products and vehicles. Real estate's the thing, right? Or businesses are the thing, or paper assets, or now cryptocurrencies, or this mutual fund, or this bond, or it's very, very, very specifically just focus on just the vehicle or the product specifically, where if you look at what billionaires do, these vehicles and products definitely feature in their overall strategy, but they're more system focused. They focus on systems and processes. So they look at their own DNA, their investor DNA, if you want to call it that. They bring in wealth architecture to build the infrastructure that they need, that how they want their lives lived, and then they create systems and processes, and then they put in the vehicles and then the products in there to drive this wealth strategy of them, right? Where the average person starts right away with the mutual fund, for instance, right at the bottom. They don't have the systems, the processes, they don't have the wealth architecture and infrastructure, and they don't know their DNA. I've mentioned another one too, where the wealth focus lies, is where a lot of people truly focus just on the billionaires focus on protecting what they have, where the average person chases the next high return. We made 3,000% in Bitcoin. Now the herd is chasing that.
Yeah.
Where the billionaires, I just came across a quote. I did some research the other day just on it. The quotes are just astounding. Even some of the Rockefeller family, about their family office, talking about how wealth preservation and preserving what they have is their primary focus right now. Not trying to get home runs, base hits. And then from a wealth management focus, the billionaires focus, right? They truly focus, and they would pick, for instance, a category like real estate. Sam Zell would pick something in real estate. Warren Buffett invests in businesses, and within those businesses, there's slight diversifications and way to manage and hedge positions and so forth, very high level strategies, but they're still in one asset class because that's what they know. That's what so they focus in it, where the average person, through very vehicles, try to diversify and put many, many eggs in many different baskets all over the place. Most of them don't even know where their money is, and these guys put it in one basket and watch it like a hawk. And then I will also say on the laws, that the laws of money have changed. I don't think a lot of people understand that quite. After 1971, when Richard Nixon essentially took the world off the gold standard, a lot of the laws that govern money has changed quite a bit. For instance, one of the laws that we talk about quite a bit is money in motion needs to stay in motion, because money, through this unseen tax of inflation, is devalued every year. So you're going to have to keep money moving, otherwise it's going to die. And what does the average person do? They park their money. They have their money set idle in banks or in financial institutions. Banks and financial institutions, on the other hand, they know how to play the game, and they turn the money that these folks park in with them over and over and over again.
Yeah, MC, you bring up a good point there. And it's one that Robert Kiyosaki, author of Rich Dad, Poor Dad, has mentioned before. And he says, savers are losers, debtors are winners. And when you're talking about inflation in an inflationary environment like we are in today, you're right. You do have to keep your money moving and working for you. But more importantly, I think you have to keep other people's money moving and working for you, and not just your own. So what are your thoughts on that?
Yeah, absolutely. That's part of it. You have to be able to leverage your own assets and yourself, and combine that leveraging the assets and the skills and the knowledge of other folks. So that's the name of the game. And again, tying into what billionaires do, is they know how to leverage other people's money, where the average person's told that they should never get into debt. Debt is bad. Pay off all your debt, So it's just the complete opposite of, again, of what they do.
Yeah, right. Well, MC, have you found any one strategy that works well across the board for business owners, investors, entrepreneurs, just normal day folks? Is there something that that works for everyone?
So what we teach a lot is we work with a lot of investors. We work with a lot of business owners, entrepreneurs, and also professionals. And the one strategy that we've looked at is, the specific client that we have as well is the average advice is not going to work for them. They need something that provides economic efficiency. That's got to be part of a financial strategy, meaning you have to protect yourself against taxes, inflation, financial fees. I'm here in Pennsylvania where the Vanguard Group is as well, where John Bogle did a study that over 30 to 40 years, 2/3 of your gains might be eaten up through fees, because fees and taxes compound the way that the average person plans, right? So in a financial strategy, you have to combat taxes. There's a lot of stuff in the news right now on Social Security and Medicare being bankrupt. Where do folks think that all of the money that's going to be used to prop up these failed structures are going to come from? It's definitely going to come from taxes, right? Inflation we've covered, fees we've covered, and then also momentum. Protecting what you have and building momentum. Like an investor, one of the secrets of multiplying wealth and compounding it at the same time is not taking a step back and losing money. So you're going to have to have a strategy that protects your downside, that provides momentum. And then we also talk about $1 doing many different jobs simultaneously. So Robert Kiyosaki talks about you got to have your money work for you and make your money work hard for you. Well, we also like to position our capital in ways where it does more than one function simultaneously, right? And that's kind of how you really compress and collapse time in your wealth plan and get 15 to 10 years, the results in that time frame that takes people 30 to 40 years. So that's why we have a system that we teach our clients. It's very, very simple. We like to keep things simple, Jacob. It's not that complicated. You've got to make money, you've got to protect it, and you have to multiply it. So we create a liquidity system for folks. Again, obviously, after we've taken all the other steps of figuring out what your investor DNA is, bringing in wealth architecture and building an infrastructure for you, then we set up the systems for you. The first one is a liquidity system where we put money into a place where it's positioned favorably for taxes, for inflation, for fees, and that you can leverage. So we use the cash flow banking strategy that's based on the infinite banking concept, a book that Nelson Nash wrote of Becoming Your Own Banker. And then we leverage that to put that into cash flow producing assets. We call it passive income generators. So they have to be passive, they have to produce cash flow, and they have to be able to be automated. That's part of our income system. So we combine our liquidity system with our income system. And then we also have a growth system that we teach for our clients and help our clients structure and put within their overall wealth strategy.
Yeah, MC, will walk us through exactly what this infinite banking system is exactly.
Yeah, so it's a system that is based on dividend-paying whole life insurance with a mutual insurance company. Now, a lot of your listeners might be shaking their heads or falling off their chairs, and that's certainly what I did the first time I came across this strategy of how to create liquidity within a wealth plan. And this is what's done in family offices. I just had a meeting actually this week talking about how the importance that liquidity plays in an overall wealth strategy. So we utilize dividend-paying whole life insurance with a mutual insurance company. This is structured very, very specifically. It's insurance that's overfunded. This is not your standard insurance that you're going to go out in the marketplace. It has to be set up with the right company. It has to be set up with the right advisor. And it has to be structured a certain way. So you would have a lot of cash value available in year one. And then once you've set this up for yourself in the policy, and the reason why we use the vehicle, by the way, because people, again, get so hung up on vehicles, not the processes and systems, is the money in there is guaranteed. There's guaranteed growth in there. The money in there also, by the way, grows tax free. It also, you have the ability to get access to dividends because the mutual insurance companies pay out dividends to shareholders, which is the policy holders. These companies have paid them out for 100 years consecutively. They have a track record like no other institution. But the other thing, Jacob, that's so quite powerful about this is you have the ability to leverage your money by borrowing it at 5%, getting a policy loan secured by the cash value in your policy to invest. Now, what that means is you're not borrowing the money from your policy, but actually borrowing the money from the insurance company, and your policy cash value is the collateral for that loan that the insurance company gives you. So that means your money is in one area growing safe, predictably and guaranteed. And then you also have the ability to borrow it at 5% and then invest in real estate, which at that stage you can redirect the cash flow back into that vehicle to pay down the policy loan. And a lot of folks get hung up on the borrowing part of it too, the 5%. Every business person, and if you're gonna get serious about wealth creation, you have to run your financial life like a business. Every business owner knows their cost of capital. This is a great vehicle that shows you what your cost of capital is. So it's positioning you to make better business decisions and investment decisions. And after you've utilized it to invest, my question would be, where would you save money again, right? If you didn't have this vehicle, where would you save money? And the answer most people would say is, well, I would just put my money back in the bank, right? We just put it back into the policy because it becomes available again for another loan to invest into another asset.
Well, MC, this is certainly a strategy that many people probably haven't heard of. So let's break it down into some little pieces here. First, starting with whole life insurance. Can you explain to us simply what exactly is whole life insurance?
Yeah, as you mentioned, whole life means it's for the whole life. It's permanent life insurance. So this is not as opposed to term insurance. So whole life insurance would be a vehicle where the insurance covers you for your whole life. So, it provides a death benefit, but also the money that you paid into it provides a cash value, as opposed to a term insurance policy, which doesn't provide a cash value. It's only for a limited term, most of it 20 to 30 years, and that expires. Now, one of the things that I've learned too from billionaires, Jacob, is that as far as risk, there's a couple of ways that you can manage risk. You can avoid it, right? Just pretend that it's not there. There's no risk, right? Markets will never go down. They only go up. You can retain the risk, which means I'm aware that I'm taking on all of this risk and I'm okay with that. Or you can transfer risk to a third party. So a lot of billionaires within their strategies, if you look at what Warren Buffett does, he's a great example. He's never, ever going to avoid it, and he's never, ever going to retain it. He's going to transfer that over to a third party. So as far as a death benefit protection for the family and ensuring your economic value that you have, also ensuring your income for your family, it's a great vehicle because the premiums stay level. Your insurance costs are not going to go up. As it does with term. For instance, with term, if there's a 20 to 30 year window for that, the costs increase significantly. So I think that's kind of what it is. It's again, this is just a vehicle that's part of a system. It's a system that we've created using investment vehicles to park our money, because money has to reside somewhere. I don't feel comfortable putting it in the banks, especially with legislation on the books, especially how banks manage their operations. I feel comfortable that it's in a company with a track record of almost 200 years, with a lot of guarantees, with a lot of protection in it. So that's where I choose to warehouse my wealth and my clients warehouse their wealth, and a lot of extremely wealthy families within their private family offices.
Now, MC, many people out there are early on in their careers, maybe younger professionals, and they might be thinking to themselves, well, I don't have a lot of wealth to protect. I'm still trying to grow and accumulate wealth. Would you say that this type of person is a good fit for this infinite banking system or not?
Yeah, I think it's that person would be. Well, you're either going to be very young with a lot of time and not a lot of money. You're going to be kind of in your mid 30s and 40s where you're starting to make good money. You still have significant time available, or you're going to be at the end of your career where you're running out of time, but now you have more resources, right, that you've garnered. There's specific strategies in all of these different categories that we can share. Paying college loans is a big one. This is a great vehicle to park money in, to leverage, to pay down, for instance, college debt, because of the ability of the same dollar doing multiple functions for you. So you don't have to choose of saving or paying down the debt. You could do both. I would also say the earlier you start, because Jacob, the very, very wealthy and billionaires, I mean, they save 40 to 50% of their income. So this is a great vehicle as part of a system that allows you to pay yourself first and save it. So you got to start somewhere. Again, to our earlier part of our conversation, you start small. You start saving money every month, and before you know it, I mean, it's incredible if you have a system that's automated, the results that you can achieve fairly quickly. But you have to start somewhere, and starting small is not a bad thing.
Yeah, well, so much to unpack here, MC. So let's just run through a little quick scenario where someone might want to get started with this infinite banking system and open a whole life term policy. Walk us through what that process would look like for this individual.
Yeah, so there's a couple of clients that we have. So some of them would use it as a savings vehicle to then purchase a property. Some have capital that they want to put into the vehicle and then purchase a property. So let's talk about one where we've built up some savings. So let's just say we've built up some savings in this policy, and let's just say hypothetically that there's $50,000 of cash value in it, and we're looking now to buy, for instance, a turnkey investment property. So we would then take a policy loan. Let's just say also that it's about 100,000. So there's about 25,000 for a down payment. And let's just say, another 5, and I'm just trying to keep it round numbers, so that we take a policy loan for $30,000 to purchase that property. We would then purchase that property using that capital, take a policy loan at 5%, and then the cash flow, whether it be $300 or whether it be $400 per month that's coming into it, would then be directed back into the policy to pay down the policy. Now, once the pay down the policy loan, once the policy loan is paid down, the money becomes available again for another one. So what you can essentially do is position yourself to purchase your first property, set up a system where the property is purchased, money is paid back into it. It starts to accumulate again as you pay back the loan, and accumulate to be able to borrow again. And then you position yourself for that second property, because you can figure out when you're going to have enough available for that second property again. And what you're essentially then doing is, as you're accumulating properties, you're also growing the savings in this. So essentially, Jacob, you're going to have, if you do this for 10 to 15 years, you're going to have a nice portfolio of properties, and you're also going to have a nice significant amount of cash savings. So it's one of those scenarios where you can have both of them, and basically get both these assets in play for you and accumulate and grow both of them, both which provides cash flow, both which provides a ton of tax advantages, both which builds up equity in them. Both of them that dovetail really, really nicely within a system can produce massive results for you. So that's why I'm so focused on talking about processes and systems, because just the policy alone is not going to do anything for you if you don't know how to utilize it and don't have it as part of a system for you.
Yeah, absolutely. And this goes back to what you're talking about earlier, MC, and that is making your dollar work multiple ways for you. This is exactly what you mean by that.
Yeah, absolutely. And another thing that I will say too is, when people hear different, different vehicles or different investments. If someone say, well, MC, is real estate a good investment? Well, it depends. You're right. Is
Right.
insurance a good vehicle? It really depends. It depends how you utilize it, what strategies you're utilizing it, what system that you're utilizing it as part of, and what are some of the processes involved with it. You could go through every asset class just like that, because I'm sure you know a lot of people that have lost money in real estate, and you know a lot of people that have built massive legacy wealth in real estate. So it really, really does. It isn't the asset class or the vehicle, and this is something that Robert Kiyosaki talks about too, that the risk isn't in the investment, it's in the investor. It's all about the strategies that you use and the systems and processes that you have as part of this overall strategy.
Yeah, absolutely. So it just goes back to that vehicle. But before that vehicle is, what is your end goal? Is it cash flow? Is it accumulation? It's different for everybody. So with the end goal in mind, selecting the vehicle to get you there is really what it boils down to.
Yep. Very, very true.
Yeah. Well, awesome stuff, MC. This is a really new strategy to many people out there. Most people just look from a personal finance perspective of buy your first rental property, maybe refinance it, reinvest, do the Burr method, but this is a little bit unique in the fact that you're putting your money in a whole term life insurance policy and investing out of that almost. So lots of different stuff there, lots of stuff to take in for the audience members this is their first time of hearing about this strategy. Is there any advice you'd give to somebody who's maybe just considering this strategy? This is the first time they're hearing about it. Any kind of beginner level intro advice you've got for that person?
Absolutely. What I would say is there's two things holding people back from achieving the goals that they have in life. It's what they know and what they don't know. So
everything.
Yeah, exactly. So a lot of folks, especially when it comes to investments and to personal finance, for some reason, don't go into things with an open mind. Like I said, for me personally, it shocked me when I sat down with a very, very wealthy individual as part of within his family office style planning that he had set up, and I came across this strategy. So because I had this preconceived kind of idea of it, right? So what I would say to people is go in with an open mind, consume the information, look at the strategy, and look at how you can utilize this to turbocharge some of your investments. It's just an added benefit to and could complement what you're already doing. So we have a ton of educational resources because this is a process. This isn't something where you watch a quick video for 30 minutes or listen to a podcast and you go, ooh, I completely get this, right? So we have a ton of educational resources, and we have webinars that folks can and access as well to grow their understanding and their also their level of understanding of how this would work for them.
Yeah, such good stuff there, MC. Well, if our audience member is interested in learning more about this infinite banking system, where could they go to learn more about it?
Yeah, so we've got a webinar that we've put together that people can access at yourownbankingsystem.com. It's Your Own Banking System. They can also access a lot of information at producerswealth.com. And if you're looking for more information, Jacob, I'll make available a book to your listeners as well. If they're interested in more information on this, please send me an email. You can reach out to me at cs@mclaubscher.com, and we could get a book out to you if you're interested in really learning and more about this strategy and this vehicle.
Yeah, thanks so much for that, MC. Well, as we're wrapping up here, we've got a lightning round. It's just a series of questions we ask every guest on the show. Are you up for it?
Absolutely.
All right. Well, it's a little bit real estate gears, so we're going to switch gears a little bit. And the first question we have is, what was your biggest hurdle getting started investing in real estate, and how did you overcome that?
I think my biggest hurdle that I had was always like thinking about, because I was very young when I started, was the money thing, right? And that just ties into a wealth formula that someone taught me about, how your mental capital times your relationship capital gets you to your financial capital. I had to overcome it by increasing my relationship capital so that money wouldn't become a problem in the future.
I love it. It's such a great answer there. Well, MC, do you have a personal habit that contributes to your success?
I think one of the things that I do is being consistent in a lot of areas. So consistency is the key. So I know we're all different. You know, some folks like to batch things, as I call it, right? Like just drink from a fire hose for 2 or 3 days and then kind of taper off. Some folks do daily regimens and daily things, but I think consistency is the key, to do a little bit every day. And then also focus, because we collectively these days have the attention span of a gnat. So it's very, very key to focus on what you're working on and complete that, and just be consistent to work towards your goals.
Yeah, I love it. Well, MC, do you have an online resource that you find valuable in your day-to-day?
Yeah, so I have quite a couple of them, but for managing all of my day-to-day stuff, I actually use Contactually for my CRM, which I use, which is great. Which, if you're a real estate investor, I would definitely suggest that as well. And Grammarly, because I grew up with English as a second language, so I've gotten better over the years, but I still can learn or get some assistance how to spell.
Yeah, certainly. There's some different spellings between the language you're used to and the language we here speak in the US. So, for instance, how would you spell behavior, MC?
Oh boy, you're putting me on the spot now. Behavior, right? Did I mess that up?
No, you've got it right. But here in the US, we don't put the U in it. So,
yeah,
it's one of those funny things. So,
That's right.
Well, MC, what book would you recommend to the listeners and why?
The Creature from Jekyll Island by Mr. G. Edward Griffin. It truly was the book that really crystallized everything for me about money, how money works, and how the global banking system works, which I think every person should know, especially if you're going to create wealth and build wealth. If we're working for money or trying to have money work for us and create cash flow, we got to know what it is and how it works.
Yeah, awesome. Well, that's a new book to me. So we'll link that book in the show notes for our audience members to pick up if they're interested. MC, last question we've got for you. If you were to give advice to your 20-year-old self to get started investing in real estate, what would that advice be?
Yeah, the first thing that I would say is to critically think for yourself, and this is with investing in general, because there's a lot of information out there. That's a good thing about the internet. The bad thing about the internet and our information age is there's a lot of information out there. So you've got to be able to critically analyze and think for yourself. And then I would also say that real estate is a business, just like any other business. So you've got to be able to have problem solving skills and get creative to solve problems and find problems that you can solve. And then also you have to be resourceful in solving that problems. So that's what I would say to my younger self is engage in critical thinking, learn how to solve problems or find problems to solve within real estate, and then be resourceful in knowing what to find or who to bring on and what team members to bring on to solve these problems.
Yeah, I love it. Well, MC, as we're wrapping up here, you've provided us such great and valuable content, some unique strategies in this infinite banking system. If our audience members want to learn more about this, they can go to yourownbankingsystem.com for a webinar to learn more. And if they want to learn more about you, they can go to Producers Wealth. And of course, you've got the Cashflow Ninja podcast. Here on the Real Estate Way to Wealth and Freedom, cash flow is one of our primary objectives, and I know that's what you preach there on your podcast. So is there anything else our audience members should know, any parting piece of advice you'd like to leave with them?
No, I just want to thank you so much for having the opportunity to speak with yourself and your listeners, and just congratulate you on a fantastic show. It's really great to see what you're doing, and this was a great experience. Thank you, Jacob.
Well, thank you so much, MC. Take care, and until next time, we look forward to speaking with you. All right, that wraps up our episode today with MC Laubscher. MC has provided us with some information and resources around a really new and unique investing strategy to many of us. So look in the show notes, and I'll link all of those resources MC mentioned there for you to pick up and go explore more. Well, hey, I really hope you're getting value from this show. if you like what you've heard, please leave a rating and review on whichever platform you're listening on. For more information and resources, or to connect with me, visit www.jacobayers.com. Well, till next time, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.